So with the financial year just ended, guys, it's important to know what tax deductions you're eligible to make to ensure that you can maximize your tax return. So in this video, we're going to be talking about some tax tips and some tax deductions that you might not know about that will help you not only minimize the tax that you pay on any given year, but also maximize the amount of tax return you can get this year and moving forward as well. And make sure you stay till the end, because the last tip that I'm going to be telling you guys is a little loophole that is actually totally legal and I haven't really seen talked about before in other tax related videos on YouTube before. So make sure you stay for that one, because that's going to allow you to make some extra deductions as well. And without further ado, let's get straight into the video. So the first tax tip is with regards to working from home expenses. So due to the pandemic, many people have been forced to work from home. I myself have only really gone into the office twice in the past year. One time it was for a team lunch, and the second time was to pick up a laptop from a client. Because of this, the ATO has introduced a temporary shortcut method which will allow you to claim for all of your work from home expenses, which is known as the 80 cents shortcut method. This is an all-inclusive temporary method that was created during the pandemic to make it as easy as possible to get your claims right. The shortcut method covers all of your work from home expenses, including your phone and internet expenses, your electricity bills, and all office and work related equipment that was purchased for your home. Things like your monitor, office chair, and a laptop. The shortcut method was only originally meant to last till last financial year, but they've since extended it to the 30th of June 2022. There are other methods that you can use if you didn't want to use the shortcut method to claim your work from home expenses. The first one is called the fixed rate method, which essentially allows you to claim 52 cents per hour that you work from home. This covers expenses such as your electricity bills and depreciation of home office furnishings like desks and chairs. But it does not cover the work-related portion of your phone and internet expenses, computer consumables such as stationery like ink cartridges, and depreciation of assets other than furniture such as computers and laptops. This means that you can make additional claims for these work-related expenses on top of the 52 cents per hour that you're already claiming with the fixed rate method. And the last method is actually called the actual cost method. And this is where you essentially have to, keep detailed receipts of everything that you purchase in relation from your work from home expenses. In all honesty, I've done various different scenarios to try and figure out which method is the best and will net out the highest amount of deductions to my total tax return. I bought a Herman Millen Aeron last year, so I thought it might be better to do the actual cost method so I can claim depreciation on that asset. But at the end of the day, no matter how I spun the numbers, it always came the same, that the shortcut method always netted out the most amount of deductions that I could claim. Not only is it the easiest to calculate, but it's also the least amount of admin overhead compared to the other two methodologies. So my suggestion is for this financial year is to just use the shortcut method and calculate how many hours that you work from home and then punch it into the system. So the second tip is around your superannuation contributions. And this tip is really a method that you can use to minimize the amount of tax that you pay each and every single year. This is when you take your pre-tax income that you receive from your employer and you make additional contributions to your superannuation on top of what your employer already gives you. Now, the reason why this methodology will result in you paying less tax each year is because concessional contributions are only ever taxed at 15% as compared to your marginal tax rate. So let's take a look at two different examples. In the first example, you're going to be making an additional $1,000 concessional contribution to your superannuation. And this is going to only be taxed at 15%. So on that $1,000, you're going to be paying $150 in tax. In the second example, you don't make any concessional contributions. So that $1,000 is taxed at your marginal tax rate, which for this example, let's say is at 32.5%. So meaning you're going to be paying $325 in tax. So we can see between the two examples that by making that extra concessional contribution each and every single month, you're paying $175 each month less in tax. And the higher your marginal tax rate is, the more tax savings you'll gain. Now, it is important to note that there is a concessional cap limit, which means that there is actually a limit as to how much pre-tax income you can contribute towards your superannuation each and every single year. Right now, the cap is at $27,500 each and every single year, and this is made up of both your own concessional contributions and also the contributions that your employer makes to your superannuation as well. Now, whether or not you make concessional contributions is really up to you and what your long-term investing goals are. Now, some people out there are totally against this strategy because, well, frankly, you won't be able to touch any of that money that you put away into your super until you're well into your 60s. However, frankly, personally for me, I feel like it's a pretty good strategy for most people to not only be able to minimize the tax that they pay each and every single year, but to ensure that they have a large enough nest egg when they do eventually retire. So the next tax deduction is around self-education expenses. So self-education expenses can be deducted if there is a direct correlation between those expenses and your work-related activities. Personally, with all of the downtime during COVID, I did personally take it upon myself to, do a few more certifications in relation to my industry. And so I'll definitely be making those deductions come tax time. So for example, if you're an accountant and you're working towards your CA or your CPA, then, and if you're paying for that out of your own pocket and your work isn't funding that, then, that's definitely related to your work and you can make those deductions come tax time. The ATO also states that you can claim things like workshops, seminars, and work-related conferences as well. So the next tax deduction that could apply to a lot of people in 2022 is in relation to gifts and donations. As crazy as 2022 has been with the ongoing pandemic, the crisis within Ukraine and Russia, I've seen a lot of people on Facebook be very vocal about, what causes that they're supporting and trying to obviously encourage their friends to also support those causes as well. And you might have donated as well to some charities or different organizations to try and help out as well. So if you were one of those people over the past year that did actually make a donation, as long as you kept the receipt and the donation was for more than $2, then you can claim that as a deduction. So if you've done something good this year and donated, then make sure you do something good for yourself and claim that deduction. So the next deduction is with regard to face masks. So for most people out there over the past 2 years, at some point in time, you would have had to go out and buy a face mask or hand sanitizer as well. And did you know that you can actually claim those expenses back as deductions if you meet certain criteria? Now, if you're a white collar worker and you've just been working from home for the past year, then chances are, unfortunately, you won't be able to claim these deductions. But if you're mandated to be at your place of work and you're required to wear a face mask during the time that you're working and your employer doesn't actually provide you with a face mask, then you can claim that as a tax deduction. So this would typically apply to anyone working retail, in the food industry, or the supermarkets as well. And for other items like hand sanitizers and antibacterial sprays, work must require you to come into close contact with customers, or your work duties require cleaning as well. Common industries that this will apply to will obviously be the medical field, restaurants, retail workers, and also hairdressers are included as well. So this is the final tip, and this one's kind of like a loophole, but not really. But did you know that you can actually claim up to $300 of work-related expenses without having to substantiate it with receipts? Yes, you heard that right. The first $300 that you claim for work-related expenses, you don't actually have to have any receipts to substantiate your claim. However, once you go over that and hit even $301, then that's the trigger point as to when the ATO could actually audit you and ask for all of those receipts. So this is actually stated on the ATO's website, guys. So I'm definitely not making this up, and I'll leave a link down below to the website as well. Now, this doesn't mean that you can just, fake those expenses, because that'd be tax fraud, but it just makes it a little bit easier admin-wise to not have to substantiate those claims if you are going to be making those. And those are the tax tips that I have for you guys in this video. If you learned something new, make sure to hit that like button and subscribe for more content. And as always, guys, you guys have been amazing, and I'll see you guys in the next video.